Good evening and welcome to PM Express Business Edition. Well, two very important things have taken place in this economy that impact on businesses and the larger economy. For those who are managing the monetary and the fiscal space, they believe that they've done what they have to do to bring about an improved business environment. What do the actors in this space themselves say with respect to the mid-year budget review and what the finance minister has done to try and improve the business environment? And also on the monetary side, the Bank of Ghana has cut the monetary policy rate by some 3%, the biggest cut in a long while. What do businesses make of this decision? And also those who are watching this space from the perspective of an economist, I'll be engaging the chief executive of the Association of Ghana Industries, Seth Chumakobwa, who is live with me in studio here. Indeed, I did appreciate your time so much. And also an associate professor of economics at the Institute of Statistical, Social and Economic Research, Professor Charles Akka will be joining me via Zoom as we do our own analysis and chat on the budget and also on the Bank of Ghana. Certain measures that they are taking to try and stabilize the monetary space, as well as what the minister is trying to do to stabilize the fiscal space. But let's bring you some data so that you can appreciate the discussion that we're going to do this evening. Let's look at first the mid-year budget review. And there was the force and also trying to revise upward the budget target from that amount that you've seen over there to this new amount as well. So that is what they're going to do in terms of the revenue target as well. So you've seen some additional 2.9 billion that is going to increase the revenue, more revenue coming in. Some will say that what could be the impact on spending as well. The revised downwards in terms of the numbers there, you could see the numbers are revised downwards from 269 billion Ghana cedis from the original in terms of expenditure. Doesn't mean that they're still going to spend in some critical areas or not. So you're seeing the new budget review as well. Now let's look at some numbers here in terms of the mid-year budget review. The public debt stock as well, you're seeing that it's gone down significantly. Some will say that it has to do with the Ghana cedi and how that has impacted on the miracle. And the IMF program is actually projecting that we should exit the program at somewhere around 50-something. I stand to be corrected. And now we are doing 43, way below that target coming from the IMF. So let's look at some of the numbers here in terms of the revised expenditure for the year. It's revised from, it was programmed to do somewhere around 270 billion. It's gone down. Some are saying that can it be classified as a prudent expenditure? So let's look at the planned as well as the actuals as well. The difference we're showing you there in terms of the expenditure for the full year, according to the Minister of Finance as well. And these are some of the critical items that might be affected in terms of the sources of the expenditure cut. You've seen the goods and services. You've seen the interest payments there. You've seen also subsidies on petroleum products, lifeline, consumers of electricity, and also the gold board as well. So let's look at what we've done so far for the expenditure. Almost 40% done in the first half. And I heard the minority leader today talking about 40-60. I don't know whether there's a connection here as well. So let's look at the performance of the Ghana cedi, and it will be very critical in this discussion, where it started, the beginning of the year, and where we are at right now in terms of 10.5 Ghana cedis, 10 cedis, 5 pesos. So we're seeing the various currencies, the dollar, the pound, the rate of appreciation. And I would say that it had been a long time since I saw these numbers when it comes to the cedi appreciating against the dollar. So let's look at the inflation numbers as well. And there are indeed strong indications that inflation will drop further for the month of June significantly. We don't know whether we'll even hit that single-digit target before the close of this year. That's what some analysts are saying as well. We're seeing fuel prices as well, and that will be interesting for all of us because we're seeing that tomorrow petrol will go up by up to 2%, diesel and LPG will go down. That has got to do with the application of that 1 cedi levy on prices of petroleum products. And we're seeing some of the numbers there in terms of the debts that have been paid so far to the bondholders when it comes to the mid-year budget review. These are the numbers over there for our viewers as well. These are some more. Let's also look at the policy rate as well. You've seen the rating agencies and the numbers there. Let's move in straight and look at what the Bank of Ghana also has done when it comes to their assessment of the economy and the monetary space and the numbers that they've actually put up. You've seen that the monetary policy rate has gone down from 28% to 25%, 3% or 300 basis points, depending on whichever module you want to use in calculating your percentage change. And you've seen that the numbers over the inflation as well moved from 23.8% to 13.7%, lower since December. And if the projections are right, we will see another significant drop in the month of June. But today, Standard Bank Africa in their investor conference was saying that we could see another slight pickup before the end of the year. And that's what the Standard Bank or Standard Africa Bank was saying today in their investor call meeting, which we participated as well. So we've seen that their end year target is 8 or plus or minus 2%. That's the target for inflation. We've seen about the annual growth rate as well for Q1, 4.5%, and we're looking at somewhere around 4.9%. You're looking at 5.3% as well. These are some of the numbers coming from the Bank of Ghana. Factors contributing to headline inflation, factors causing inflation, tight monetary numbers, and all those things. Let's talk appreciation cedi. These are some of the numbers, gross international reserves. So let's get in studio and try and have a discussion with the Chief Executive of the Association of Ghana Industries, Mr. Seth Chumakoba. Mr. Koba, I really appreciate your time so much. Caught up in a lot of things, but you still made it a time to get into the studio, and I really appreciate so much. Interesting things happening as well in the economy and all the rest. I mean, let me first start with industries and how are things now? Because that is always I want to get from you, away from your barometer. What is the real pulse on the ground in terms of industries, how they are faring, before we even get deep into the matters?
Industry, you can always analyze it from different points of view. One is performance of the economy, the macroeconomic condition. Two is the industry's own performance, whether they are really feeling the improvement we are experiencing. And then from all angles, whether they are expanding, there's enough confidence to expand, and they are growing to create more jobs. And I think from all angles, one could say that, yes, the positive development we've had in the economy over the past 6 months is impacting positively. Because, I mean, from one major challenge most industries had over the years is the macroeconomic instability. Because if it is that your economy is not stable, they are unable to plan, and I mean, even fixing of prices of their product becomes a challenge because you don't know what is going to happen next. And therefore, stability is key. And from all indicators and from what you have also mentioned, I mean, the figures are clear that we have seen significant improvement in the economy, and that is impacting on industry's confidence. Confidence level is reasonably high, and the challenge is sustaining it. And I think we started seeing the signs about 3 months ago, and people were questioning, is it going to be sustained? Is it going to be continue? But I think 6 months down the line, it appears it has come to stay. But of course, we are also still cautious, and the government itself is cautious, so why not? That the business should also be cautious. So generally speaking, industries are feeling the positive development that we are having, and I'm sure it's going to impact, or it's impacting gradually on businesses.
Can you say that these favorable macroeconomic numbers is impacting on businesses? Because there were some consumers outside who were complaining that we are not feeling the stability in our pocket. in terms of the consumer prices. Even though the minister in the budget sought to give some numbers to suggest that prices have gone down, there are some goods too that have also stayed flat as well. For industries, have we seen these stable macro numbers impacting on your operations?
Yes, it is. It is impacting on our operations, and indeed, we don't expect otherwise, that suddenly when there's improvement in one element of your cost, everything should drastically change proportionately. It doesn't happen like that, because for some businesses, the impact of the cedi may not be that much, because they are not very much into foreign trading, where they need dollars, or, I mean, they do so much foreign exchange currency arrangements. For some of them, it's purely local. And for them, the change in the cedi may impact, but insignificantly. Therefore, you shouldn't expect too much change from that angle. But one can say that on the whole, it's impacting. It's impacting in the sense that at least it's enabling companies to plan a little bit. That if I fix my price this way, in the next 3 months or so, I wouldn't need to have any knee-jerk reaction by changing prices. I wouldn't know what to do. If I'm importing, I know that my imported raw materials, if it comes in at this price, by the time I finish processing and selling, I probably will still have it at the same level. And therefore, I don't need to make too much provision in the form of higher prices to cater for whatever exchange losses may come about. So for that reason, people are experiencing the impact. However, we must also appreciate that in the short term, you can't change so many factors in the production process. And it takes a little while to mature. And that's what we keep saying, that we talked about prices. Why are prices not? People were saying prices didn't.
Dr. Atuforson was in the budget was charging that industries respond.
Oh, yes, we have responded. And but that's also the reason why.
Have you really responded? Because
but there's a clear indicator. And the clear indicator is the inflation level. The fact that inflation level is dropping gives you a signal.
Rate of increase has slowed.
The rate of increase has slowed.
Yeah.
It means that, because otherwise, every time we're having, as of last year, December last year, we had 23% or so end of year inflation. Today we have been about 13 point something percent. So significantly it has dropped. And you cannot say that it dropped out of nothing. It dropped because prices of goods are coming down. So clearly there's an indication to that effect. But
industries are reducing their price.
Industries are reducing their price.
And that is a fact.
That is a fact. And if you monitor, some of them came out openly to announce. Others didn't announce, they make it quietly. But then when you go to the market, it's clear that prices are coming down. And bear in mind that competition itself is driving some of the prices down. Even to the extent that, I must mention this, that sometimes when we see the gains, we think that the gains is affecting everybody positively. There are, a segment of industry, of businesses that have not been that affected positively because of the nature of their business. I was speaking to one of our members into rice milling, and he was giving me this example, and that's classic. He said, input cost hasn't come down because for us, our input cost for production of rice is fertilizer, is equipment, and all that. None of them, labor costs, they have all not come down. So cost of production has actually remained the same. They are not necessarily exporting. That is interesting. They are not exporting, and therefore, they are not making any foreign currency gains. They are selling in the local market. But you know the effect? The effect is that because their input cost hasn't come down, their prices cannot also drop that significantly. Meanwhile, imports are becoming cheaper. Imports of rice are becoming cheaper because the same amount of dollar, you need less cedis for the same amount of dollar. So imports are becoming cheaper, and therefore people are importing more. When they come, they compete with you. So on one hand, it is good, generally speaking, it is good. The net effect is positive. But there are certain segments of the business area that are actually struggling because of some of these gains. So I'm not in any way, don't misconstrue me. I'm not in any way saying that the gains are not good. But we just have to recognize that there are certain segments that are affected. One of our companies wrote to us, and they made it official. They even wrote to the Ministry of Finance and all that they are struggling because the cedi gains is because they do a lot of exports. Their input cost hasn't gone down. The cost of labor, everything is still the same, but then they don't get the same amount of cedis they were getting as a result of the cedi appreciation. So such groups, we need to ring-fence them and see how we can divert policies, target policies at them, and make sure that they survive. If you want to have the maximum gain, what you have to do is to maximize the gains in terms of the exchange program and then reduce the negative effect on the others, so that the positive, the overall effect will be very positive. So I think that we need to recognize those who are being affected as a result of this, and those who are making reasonable gains. And those that are affected, what can we do? What policies can be put in place to support them a little bit, so that they come at par and they survive in business?
In terms of the prices, I know there was a first round reduction. There was a second round reduction. Are we going to see a third round reduction? Because that's the stability that most of your members were pushing for. We've gone beyond a month now. We've gone beyond 2 months now. Are we going to see another round of price reduction?
It is very possible. But you also realize that we saw a drastic appreciation of the cedi in the first 2-3 months or so when it started.
Somewhere around May, yeah.
Around May, thereabout. For some time now, it stabilized. So much as we've had positive indicators of most of the macroeconomic variables, we've also had stability, which is also ranging between a certain, hovering between
10.45.
So it's not going way down again. So don't expect too much from the manufacturers. However, I always say that because competition drives prices, if the situation is such that the cost of production is coming down as a result of the gains we are making in the city, price will definitely drop. So let's monitor what happens in the next couple of months, and I'm sure industries will follow.
We'll be coming deep into the budget and what are your perspective on that. But let me also get on to Zoom and engage an associate professor of economics and head of statistics and survey division at the Institute of Statistical, Social and Economic Research, Professor Charles Eka. Prof, thank you so much for your time. It's been quite a long time, and thank you for joining us on PM Express Business Edition. I mean, let's take a look at the mid-year budget review. And from your perspective as an economist, do you think that from what has been done, we are assured of the stability that we've seen? Because there are some who've argued that we are not spending, everything was being managed tightly. Now that we're going to open the books and go on a spending spree, the real challenges are there.
Well, thank you very much, George, for having me, and good evening to cherished listeners. It's actually been a long time. I think generally, well, you could look at the mid-year review from a statistical point of view. The statistics are showing some good performance. If you measure them in the context of normal orthodox economics, you will see a reduction or some form of consolidation, fiscal consolidation has been achieved in terms of the primary surplus and inflation trending down, exchange rate stabilizing. So I think that is good to some extent. But you have to ask yourself at what cost? What is our vision as a nation? What do we want to achieve? So if it's just to appear to be achieving some good statistics, then I think we should give congratulations to the managers of the economy. But if the bottom line or the vision is to create jobs, to build a competitive, resilient economy, to improve the welfare of the Ghanaian, to reduce poverty and inequality, then I don't think this mid-year budget review gives any excitement. Because if you look at what has actually happened, I think it's mainly resulting from the external sector. The external sector, because of the increase in gold production and export of gold, we are gaining a lot of external advantage from there in terms of foreign exchange revenue. And also the cocoa is doing well in terms of the price. And the crude oil price has stabilized, and therefore all of these are giving us some windfall to which the managers of the economy could claim advantage and say it's purely as a result of their own doing, as we normally do. But I think most of the results are externally driven, and if things change, We have seen this before. If you look at the budget, 2013 budget, 2014 budget, 2015 budget, when President Mahama was still there, we recorded some 2.8% budget surplus. But if we fail to build a resilient economy, it's susceptible to shocks. And if the gold prices fall all of a sudden, and crude oil price goes above the roof all of a sudden, you will see that everything has changed. Also, you will see from the Midyear review that the government has not really spent. They've reined in on expenditure because they are trying to consolidate or what's called fiscal discipline, whatever that means. They are not spending as much, and they are not spending particularly on the capital expenditure, which is the development expenditure. So that essentially is something that should be worrying. So it means contractors are not being paid, roads are not being constructed, infrastructure, both economic infrastructure and social infrastructure, nothing much has happened over the last 6 months. And that's where the productivity should arise from. That's where the competitiveness of the economy should be resulting from. And that's where employment is supposed to be coming from. So if we don't tackle that, the year ends, we could still have these figures that will satisfy the IMF, but it's not something that any serious economist should take excitement in.
But Prof, shouldn't we celebrate fiscal discipline? Because some would say that spend at the expense of having overruns, spend at the expense of resulting inflation going up substantially. So if I can manage my spending in a way that it matches the revenue that is coming in, isn't something that even though a government might not be spending, we should celebrate? The case may be I'm trying to check my expenditure, I'm trying to check my weight, and I go not eating after 6 and all the rest, and some people complain that, Master, the food they eat. You know, am I right in trying to compare apples and oranges here?
Well, fiscal discipline is good if it's defined as a reducing waste of resources, reducing corruption, and then improving on expenditure efficiency, then it's good. But if fiscal discipline means that you should run a budget surplus as a developing country that has so much waste, so much idle resources, manpower resources wasting. People have finished university, 5 years, 6 years, not getting jobs. Nurses are sitting at home, teachers are sitting at home. Universities cannot employ lecturers when there are so many students. Roads are terrible from here to Kumasi, all over the country. You need to invest in infrastructure. You need to invest in the productive capacity of the country. And if that means you must run a reasonable budget deficit, and as far as this budget deficit is going into investing, I mean, even in the private sector or households and individuals, people borrow to invest in real estate, to invest in businesses, and that's not imprudence. Okay, so if we are borrowing from the central bank or borrowing from treasury bills or even external borrowing, and it's not for salaries and wages, it's not for buying V8s, to run high budget deficits that you don't see any value for, and it's to invest in the economy, particularly infrastructure is terrible across the country, and it's slowing down our productivity and high growth. And it's not creating jobs for people that are finishing university. I have students that have trained, first-class students, that haven't found job in 5 years. Okay, so if even America is running budget deficit, Malaysia, Singapore, tell me how many countries in the world that are run budget surplus. Okay, so why will a poor country like us seems to be happy that you are cutting your coat according to your size? What does that mean? Okay, so have we finished solving our problems of infrastructure? By the way, I mean, you can check and see that we have so much problems and we need to invest. Government need to spend. The private sector need to spend. The government need to spend to crowd in the private sector. And that is not happening. So I don't think that is discipline. By all means, we should reduce corruption. We should improve efficiency in expenditure. But we need to spend. Government need to spend. We have so much. Go to hospitals. There are no beds. People are dying in the hospitals. There's a lot of challenges. Even wages. Wages are lagging behind labor productivity. Look at the average wage paid to salaries, public sector earners. They can look at the inflation, look at the cost of rent, Look at the cost of food. And people are being paid 1,000 Ghana cedi after graduating from university, 1,200. So, and if all of these things are problems to solve, and the government sit down and say, well, we are trying to be disciplined, well, I don't know what that means.
Do I get from you that in terms of the current gains that we're seeing, it might be difficult to sustain that in the second half of this year?
Definitely. Well, it could be sustained if the aim is to make sure that the books are looking good. Government can do whatever it wants. I mean, basically, we have the advantage that we have defaulted on our debts. We have gone on to a very expensive, very wicked domestic debt exchange program that meant that people who borrowed to government refused to pay. Then we've gone to the international market to negotiate that we will not pay our debt. Some of the debts have been rescheduled. 2017, 2018, we are going to have a huge problem. So if we decide to continue to just appear to satisfy the IMF, I don't know why the IMF thinks that we should have reduced the public debt to 55%. On what basis? What is the meaning of that? What is the public debt of Japan or Malaysia or Singapore or the US? Why should we think that our debt, if your debt to GDP is 50%, it means you are a good economic manager? Who says that if you run a budget deficit of 1%, you are a good economic manager when your roads are terrible, when it takes you 8 hours to travel for a distance that should take you 2 hours? If you want to go from here to a friend place, you can spend the whole day. You can't put a simple bridge on the Volta River as a country since independence. Then you are running a deficit of 1% surplus. Where are we going with that? So it doesn't create hope for young people that are going to school.
Prof, in terms of philosophy-wise, I get from you that you are for the expansion approach in terms of expenditure, spending to expand the economy. But where lies the argument also about cutting your coat according to your size?
No, there's nothing like that. So the economy is not run like a private individual. Even private individuals, if it's about what to eat, of course, nobody is asking a poor man that earns 100 cedis a month to go and sit in a hotel and not be able to afford. But we are talking about investment. We're talking about capital expenditure. So, and all over the world, including America, Japan, when Japan was run down after the Second World War, or Germany, how did they build the economy in a few years? How did Malaysia leave us? In 1960, Ghana and Malaysia, South Korea, were at the same level. Now the GDP per capita of Ghana is just about $2,400 per person, and Malaysia is almost $12,000. South Korea is about $35,000 to $40,000. How did they leave us in a span of about 60 years? And let's check the economic history and see how many rich countries now developed by just cutting their quota according to their size. There's not one I know. There's no country that built infrastructure. How is Japan, even China? How is China? Look at the budget of China and see whether they are cutting their quota according to their size.
Prof, I'll get back to you on what we need, the critical areas we need to tackle, because it will ensure that, again, whatever that we're doing, everybody feels. But Mr. Kobo, for you as industries, I mean, do you see the light at the end of the tunnel with respect to what has been done from the perspective of industries, expenditure-wise, revenue-wise? The taxes issue is a big debate because there are some who are saying the government is saying, okay, they will try and restructure the whole VAT system. For you as industries, how do you look at what has been done in the mid-year review, and does it give you any excitement going forward?
Well, I must say that the experiences of the past actually affected industries significantly. And therefore, the hope of industry at the beginning of the year was getting some stability in the system. And therefore, they've held the stability that we've experienced. And that's why perhaps the complaints have gone down a little bit, significantly. And so it means that they are embracing the stability that we've achieved. But then, going into the second half of the year, expectations are growing. How can we consolidate what we have gained? And here, and I agree with Prof, that when we are talking stability, you should at some point go beyond the stability, because Stability is good, but you consolidate it. And beyond the consolidation, you must grow. So what are the plans for growth that we are experiencing? And I think in the second half year, not so much has been promised that gives indication of significant growth. But what we are seeing is that consolidation of the stability can take place so that it aids planning. And that, for me, is good. But what are the growth factors? There's a big push agenda which government is trying to push, which is not bad, but where's the resources?
And that's my biggest question. I know Prof would disagree with me. My concern is that where is the money going to come from to fund those aggressive and ambitious expenditure plans by this government and then in the budget?
Well, they say some oil revenue pledge, go there, which is all good. But it's quite ambitious. But we welcome it. You see, for private sector, we want to see expenditure from government in an efficient manner that is channeled to the productive sector. And indeed, if you are doing roads and infrastructure, it helps to support the growth of industry. No doubt about it. Where to get the money is a challenge. If you're able to get the money, then and we channel it properly, and we do proper value for money arrangement, and do proper procurement, it's going to help turn around.
Let me bring in Prof. Just a quick one. Prof, I mean, I get from you that, judging from your philosophy, you are for these aggressive capital expenditure that has been outlined in the budget, which has been reinforced in the mid-year budget review.
Definitely. I'm very supportive of the big push agenda. I don't like the name 24-hour economy, but I like the details that is in the document. And that basically takes us to Kwame Nkrumah's philosophy, or a champion's philosophy. The government has a critical role to play. We need a developmental state or an entrepreneurial state. We suffered a lot from the IMF World Bank supervised economic reform program, strategy adjustment program in the 1980s. And the experience from that has been very sad, that we were advised to privatize almost all the state-owned enterprises. Banks, ADB changed focus, Bank for Housing and Construction, and all of that, to the extent that the state almost withdrew from the market and said that state is just supposed to create an enabling environment, and the private sector should go. But in countries that have developed, including East Asia, the state is a great partner of the private sector. And actually, it's a state that normally de-risk the sector. If you're talking about agriculture revolution, the private sector cannot do it alone if the state is not a critical, crucial partner. And when I talk about a state, I'm talking about the Ministry of Finance. I'm talking about even the central bank itself in terms of making sure that there's adequate liquidity and low interest rate. The financial sector is friendly and accommodative to make sure that businesses can predict and can borrow long-term at a low cost to be competitive, because we are in a competitive world. So agriculture is key. Industrialization is secondary. We cannot feed ourselves. Food is so expensive. In this country, you can buy a cob of roasted corn for 7 cedis, 5 cedis. Okay, so you can see that food is taking about 60 to 70% of some. Yesterday, I talked to some national service personnel who are working at the University of Ghana. They are spending about 50 cedis a day on lunch and breakfast alone. Okay, and they spend about 30 cedis TNT to move from Adenta OEB to come to Legon. So that's about 80 cedis a day in national service personnel that earns about 700 Ghana cedi allowance. Okay, and they are not living an expensive life. That's how much food costs on the Legon campus, even if you want to eat basic food. So how do we invest in agriculture to produce enough, to reduce our import of food, and to be able to get enough raw material for agro-processing? If that requires that the government must invest and must run a decent, reasonable budget deficit, if that requires that the central bank must be a partner to make sure that there's adequate resources, lending to or giving resources, earmark funds to the banks to on-lend, like the DBG or Agriculture Development Bank, this is prudent. It's sound economics.
Okay. I mean, Mr. I was trying to get from you about the encouragement going forward. Does this mid-year review gives you that encouragement going forward, industry as a whole, that gives you some excitement that going forward, we expect things to stabilize? They are touching the right spots with the policy options and reviews and focus?
Well, I think it's generally positive, as I indicated earlier. And there are a few pointers, depending on how we manage it, which can make significant impact. I understand that in terms of revenue projection, in terms of expenditure projection, it's not as high. And I believe it's an effort to consolidate the gains we've made in terms of the macroeconomic stability, which for me, I said, was initially frustrating the businesses. And therefore, if we are seeing stability, we welcome it. We want stability, we want sustenance of the stability. But then we have to look into the long term. And the long term is very important. That's why the big infrastructure arrangement resonates quite well with us.
The big
and
push.
then the big push is good. But I hear our caution that, you see, it's all how we manage it. When we say the big push, and we are talking of big, grandeur infrastructure activities, what is the level of local content in there that will kneel to the benefit of the businesses? So the infrastructure itself is good, but if you want to have the maximum benefit, then make sure that local content is adhered to. So all the materials we are using for the road construction, the ancillary business that will come along, let's be sure that it comes to the local people. Even when it comes to the construction companies, we should look inwards and pick more of the local companies, that companies that are based there that can do the business, so that whatever resources they make can impact positively along the chain. So that's very important. Besides that, I think for the midterm budget review, a provision was also made for the government, policy of the 24-hour economy. Yes, Prof says he doesn't like that.
Prof doesn't like that.
Yeah, but the policies are okay.
Yeah.
Because I think it's looking at agriculture value chain, it is looking at manufacturing, it's looking at agriculture, the linkage between agric and manufacturing, and some incentives to actually propel the manufacturing sector, which is all positive. So we have to push resources there. Again, it's how we manage it. What are the big wins? What are the triggers or the key sectors that we should be targeting? We can't do general policy and expect a significant, drastic change in the economy. We should pick a few areas more targeted approach should be helpful. So therefore, if we have the 24-hour economy, we are looking at the policies that it entails. And I like the idea of government also saying, let's use government procurement. But government procurement, even though individually government is a single buyer of goods and services, when you put it together, how much is it? It's not as much. And therefore, it is important that we focus on government procurement to support local industries. But that cannot be the game changer. The game changer is the right policies that encourage local production and local consumption of local goods. So if the 24-hour economy policy can address that, then that will give the kind of hope that we're talking about. Again, if you are looking at the financial sector, because one major challenge we've had over the years, especially at the SME level, is access to finance. And part of the reason why the bank says we can't give you funds, we can't give you money, is because the risk level is high. And the risk level is high because of so many factors, the instability, the uncertainty, and so on and so forth. So if we have all the environment improved, access to finance can improve. And here we expect that some improvement will come in the area of government freeing itself. And if you look at the Treasury bill rate today, it's an
we'll be coming when we do the policy. But
Okay.
let me come to the taxes and the revenue thing.
Okay.
There are some businesses that were pushing so hard for the COVID-19 to be taken off.
Yeah.
Some have argued that government keeps pushing the date back. They have to do some reforms. They are working on that. It will take in September, and the minister says next year budget, which will be presented in October this year. Let's look at the tax policy measures in this budget. Are businesses satisfied, or there are still concerns about there are too many taxes that businesses themselves are struggling to understand?
Well, I think in the midterm budget review, there was no significant tax policy.
Yeah.
I mean, it's just a mention that government is going to work on the...
But the fees and charges are going up. That also adds up to your cost.
Yes, that one adds to their cost. But I was talking more on the positive side, where we are going to have some tax reliefs. I'm saying that in the budget review, we didn't really see significant tax reliefs because...
Are you worried about that?
We are concerned about it. We would have wished that, in fact, at the beginning of the year, we knew that VAT, because, I mean, last year, if we followed the campaign, all the presidential candidates...
Are you disappointed that the VAT issue had dragged, despite the justifications coming from the Minister of Finance? By now, whatever reforms that the IMF or Ghana is having with the IMF should have taken place for it to go off?
I think so. At the beginning of the year, because that was the beginning of the government regime, and there were a lot of uncertainties, they were planning things. So beginning of the year, one can give them, a bit of room. But in the midterm, I think that by now, we should have some changes in the VAT regime in particular, because that was having a very biting effect on industries. So we thought that, and the pledge that we had from government, we thought by now it should have come in. But if they say up to the end of October or something, then let it be.
Possibly going to be next year budget. And we know when these things are passed in Parliament, it takes off the next year beginning rather.
So that's a bit of a worry. We would have wished that it comes in a bit earlier so that we can have the positive effect.
How bad is the taxes issues and even with this COVID-19 thing on your operations? At the time when you are saying that you are still having issues with cost of production for some of the industries?
No, I think that we need to do serious reforms in our tax regime. And we've spoken several times about it. We cannot continue with the current tax regime because it's too biting on businesses, on industries. And if you look at it, some of them are also very unfriendly to the manufacturing sector. And we've pointed all this out. So we are here to see that significant reforms. I understand that at the beginning of the year, there were a few tax reliefs here and there, but they are not significant, transformational enough. So the pact that is going to be transformational, we are here to see it. Well, we know that they are working on it, but I think it's taking...
But I'm talking about even with the COVID-19 levy as
well.
Oh,
the COVID-19 levy.
How did it impact
COVID-19 levy is part of the VAT system.
VAT system. And
so government says we are reforming the whole VAT regime. And when we reform it, we can then take it out. We would have wished that immediately take it out whilst you look at your reforms and all that, because, it's long overdue. It's overstayed. COVID has left us how many years ago? So by now, we shouldn't even have anything like COVID-19. But we know that government sees it as a revenue measure.
That could be,
So in that sense, then give it a different title and let's interrogate it. But as long as you call it COVID-19, then it doesn't really resonate well with it.
Let's look at even with the whole VAT system. And I know some of your members have complained that even what they call the tax before tax, you are even taxing the company before the company even starts anything on the production. Then you tax the company again, then you tax the company again after production. Help me out, the 101 here. How bad is the tax situation for a lot of industries here that when they produce, they are competing with a product coming from China that has enjoyed a lot of government support and rebates and all those things?
So you see, tax adds to your cost of production. It adds to your cost of doing business. And therefore, if you want to recover your revenue, you must recover in the form of higher prices. And that higher prices make you uncompetitive. And therefore, it is indeed it's having a negative effect on industries and on businesses. And that's the reason why we say, let's review the VAT regime. And especially the aspect that, as you mentioned, there's tax on tax. Aspect of it is tax, and then you put the tax on the part that you have already taxed. So double taxation there's an element of double taxation in there. And then the other aspect is that if you look at manufacturing in particular, there are certain taxes that if you put on manufacturing, it is more at, it should be more at post-production stage, not pre-production. But if you look at the tax regime, a lot of it happens at the pre-production stage, and then it has an effect on the final price of the product. So it's making us uncompetitive, and therefore a review is very important. It's in order that we review some of these tax policies. There are other tax regimes other tax elements that we've spoken about. I believe that we noticed that in the midterm budget review, government really didn't want to tamper with the policies, probably because of the IMF conditionality. They want to conform to the IMF, the compliance with the targets that have been set and all that. But it's about time we look at it critically to see how it eventually impacts on businesses.
Are you worried? I mean, you've spoken about the IMF. I mean, next year, we are getting out of this program. I mean, there are some of the school of thought that when you go into an ICU and you are good, get out quickly, don't stay there. There are some also said that, well, we've seen what the fund program has done for us over the years. Are you of the school of thought or those who are also worried about the outlook for the economy when we get out of this fund program come May 2026?
I don't think we should worry getting out of it. We should only worry if we think that we are unable to manage our own systems.
Can we do that? Some are saying that what we are seeing over the past months was due to the fund program.
Yes, I agree. The fund program has helped a great deal. We got to a point where without the fund program, things were going very bad. So the intervention of the IMF has helped a great deal. There's no doubt about it. That's why we should follow the program to the end. But then when we follow it to the end, we need to, at some point, come out of it. Coming out of it means we should be more creative and innovative in the way we manage things, but we should be more efficient also the way we manage things, so that if it's revenue we are mobilizing, we mobilize it in an efficient manner, in a fair manner, in a transparent manner. And when it comes to the expenditure, we should do the same. If you do that, I think that without the IMF, we should be able to solve our problems and live without the IMF. We should be creative, but if we go back to the old days, where things are not done transparently and all kinds of things, the problems we had, and then there's also external shock, then it buys us more, and we have no choice than to go back to the IMF. I think we should gradually, this is not to say that we shouldn't have anything to do with the IMF. I think that there are other arrangements, other financial arrangements you can have with the IMF that is not in this kind of condition, and we should explore those conditions, those other options to improve our economic situation.
Let me bring in Associate Professor at Professor Charles Aka. Prof, I mean, we've tried several reforms over the years, and I'll bring it down for you to do an assessment of government's revenue policy for this year. For you, what are your concerns about why are we not getting it right when it comes to our tax policy measures to raise the required revenue to fund that expansion that, I mean, you are pushing for?
Well, thank you very much. I think it's a general lack of seriousness in managing the economy of Ghana over the last years, and we need to admit that the fact that we've gone to IMF 17 times is a standing rebuke of those that have managed the economy since the last 40 years. There are several countries that have never been to the IMF, even though they are member of the IMF, for a program like that, to put us in ICU. Since Malaysia got independence in 1957 as that, Singapore, South Korea, other countries. So we should not be thinking that going to IMF every 3, 4, 5, 6 years is something that we should take pride in. And then whenever the IMF comes, of course, their medicine is standard, it's orthodox. We know it. It's the poor that normally suffers. They freeze employment. They'll ask you to discipline or consolidate, whatever that means. Government should not spend, should not employ. And in the end, the country never develops on an IMF program. It's an emergency situation. So the earlier we came out of it, the better. Of course, it doesn't mean that there are no advantages of being on the IMF. The way we ran the economy in the previous administration, the IMF was the only option because we had totally mismanaged things and the external sector did not help us. COVID-19, Russia, Ukraine, everything was out of order, and therefore we needed to go to the IMF. But the IMF is not a savior, it's not a panacea. So we need to come out of it. And a country with so much, intelligent people, people who have gone to school, people who should be able to manage this economy better than the IMF should be able to do it. So I think that we have what it takes to manage the economy. It's been lack of political commitment, lack of seriousness, and the politics is too much. This NDC, MPP politics, they have not helped us. They are very intelligent people, people that are committed, patriotic people that could be brought on board to help manage situations. They are excluded because they are not flag card-bearing members of any of these two political parties. So we have been appointing people who are into positions without merit. And from the day one that they are not going to deliver. And nobody is held accountable. There are no KPIs for people to perform. So the GRA has been underperforming. I mean, the tax system needs to be reformed. The tax base is too small. The tax to GDP is not good. It means we are not raising enough tax revenue. That's why we keep borrowing. There are many people who don't pay taxes. The informal sector is totally excluded. We have not found innovative ways of bringing in the informal sector to pay their due to the government. So the focus is on indirect taxes. VAT, you buy something, I bought something today, and the thing's supposed to be 150 Ghana, and the tax on it is about 28 Ghana cedi. Okay, so apart from the fact that you work, you pay about almost 25% of your income as tax. You are left with about 75% of it. Then you buy something, then you pay another about 22%. The taxes, VAT is 15%, NHIL 2.5%, Get Fund 2.5%, COVID 1%, tourism 1%, 22%. It's too much. It's too much. So I don't know why then people thought that they have to bring it to 15% and put all of these things. I think it has to be brought down. We need to focus on the progressive taxation. VAT is a regressive tax. Progressive taxation, let's look at the income tax again. Let's look at property taxes. Let's look at wealth taxes. Let's look at luxury taxes. Let's look at people that are rich to bring them to pay properly so that we can finance the poor and all the education and health sector. We are not doing that. So the easiest way is just to keep adding levies, and everybody is suffering, especially the industry. So I think that we have been quite lazy at raising revenue. Domestic revenue mobilization should be one of the reforms we should focus on. And everybody, every Ghanaian, every business should be made to contribute towards the development of the economy. But that said, if people are paying taxes, then they need to see that there is benefiting them. And there are several parts in this country that people don't look like they are first class or second class citizens. There's no development for 20 years. There's no road. They don't have access to potable water. People are struggling. Children are walking miles to get to school. Pregnant women have to sit on motorbikes to get to hospital. So if taxes are not delivering results, and you only see things when it's election time, and you see some kind of, after election, people, it will take 8 years before you can see any kind of significant. I live in Adenta somewhere, where I've lived there since 2011. There's not been any single development in that area. The road in front of my house, around the Victor Presby area, is still untarred. But governments have come and gone, And you don't understand why in Accra, you should have roads that cars cannot drive on. This is Accra. You go to several places, if you don't have a 4x4, you can't drive. People struggle to get car to go to work. In the evenings, there's no proper public transport system, mass transport system. In Ghana, 21st century, 68 years after independence, we don't have railway working, we don't have proper public transport system. There's no other way of going to Kumasi except going through that killer road for 6-7 hours. Look at last week, about 15 children perished on that road when their car got. What is the meaning? When will this stop? So I think that we need to raise adequate revenue internally. Where we need to borrow, let's borrow prudently, but that must be invested in the development.
And Prof, in a minute, do you think that this budget has gotten it right or is getting it right with its revenue measures to ensure that they would end the year hitting their target, or it's still a challenge? In a minute.
Well, I think there's still more room. There's an improvement in the tax revenue, but I think it's still quite low. It's below our potential. We can raise almost twice as much revenue if the GRA, and one of the things that has failed us is the decentralized. The assemblies are not doing well. Okay, there's a lot of potential to raise revenue from all the assemblies. They're all waiting for the District Assembly Common Fund. They are not collecting the revenues, property taxes and things. And I think we need to do more reforms over there.
Prof, don't go away. We'll take a short break. When we get back, we'll talk about the policy rate, cutting it down by 3%, and also other measures that the Bank of Ghana is taking to try to stabilize the economy. I'm engaging an associate professor at the Institute of Statistical, Social and Economic Research, Professor Charles Aka, and also Chief Executive of the Institution of Ghana Industry, Seth Chumakwaba, with me here in the studio. We're back after this commercial break. Let's talk the policy rate. Welcome back to PM Express Business Edition, as we're talking about the mid-year budget review and also the Bank of Ghana's significant cut in the policy rate. Depending on where you track your data from in terms of historical data. Some will say that this is the biggest that we've had in a long while since Bank of Ghana started a strict implementation of this inflation targeting policy. There could have been some huge cuts, maybe somewhere early 2000 or something. I stand to be corrected, but some will say until recently, this is the biggest cut that we have seen in the policy. Could you have seen a bigger cut than what we've seen in terms of the 300 basis point or not? Let me get back quickly into the studio and get the thoughts of the industries as well. And I'll get on the Zoom with Professor Charles. I can see Professor Adise. I mean, happy, excited, 300 basis point, or we could have done better than that?
Well, anytime the Bank of Ghana keeps policy rate the same, we get worried. And we've complained in the past that looking at the stability and improvement in the macroeconomic environment, we were expecting even previous times to have some reduction. So this time, the fact that it's been reduced is good. By our calculation, we thought that it would come to about 23% instead of the 25%. So we were expecting a much bigger.
500 basis points.
Yeah, we were expecting a lot more significant reduction. However, of course, they explain themselves to it that, I mean, there are also other risk factors that have to be taken into account. But I think if you look at the drop in inflation, the macro variables that we've experienced over the past few months, first half year, the drop is in order. But we would have even wished that it's dropped further.
Today, we engaged the Chief Executive of the Association of Banks, Mr. George Wiafe. He said that in terms of the composition of the Ghana reference rate, the policy rate commands about, if I got him right, about 40% or so in calculating the Ghana reference, which is more of the benchmark for actual cost of credit in the country. And from the 3rd of August, we're going to see some good reduction in the Ghana reference rate. If cost of credit plays a critical role in your cost of production, would this reduction in cost of credit impact on cost of production and the things that you sell to buy, indirectly asking you that, are you also going to reduce your prices if your cost of credit is going down because of this?
Well, thank you. I think, first of all, let's appreciate that a drop in policy rate does not necessarily mean a drop in lending rates. Because we've had this in the past, where there will be some significant drop in policy rate, but then lending rates sometimes remain the same.
The lag time.
Yes.
But the CEO is saying that from 6th of August, it is going down.
That is what
a good reduction in the Ghana reference rate.
Yes.
I don't know what he meant by that good reduction. What would that mean by that? So if it's going to go down significantly, our industry is going to respond?
No, that's our expectation. That first of all, once the policy rate has dropped, we should see a corresponding drop or significant drop in the lending rate as well. So if you're going to have that improvement, that reduction in the lending rates, and definitely it's going to impact positively on businesses. You know, cost of capital adds to the cost of your doing business. And therefore, if some cost elements of your cost structure is going down, your price must come down. So, for sure.
Is that an assurance from industry?
It is an assurance, but
some will say that we see the same CD argument being played here. We need more time.
Oh, but the CD argument,
we need about 30 days and all the rest. What will be different this time around? Because this was not even just one commercial. This was the CEO of the Association of Banks who was making this claim that from the 3rd of August, that is Wednesday, we are going to see some good reduction. And I'm using his words carefully. If that good reduction happens immediately and cost of credit goes down, we'll see industries responded.
But George, I think to be fair to industry, when we said we are going to see reduction in prices as a result of the gain the CD has made, and then we said, oh, it's not going to happen immediately, but give us some time. Indeed, over the past 4 months or so, we've all seen the improvement that has happened. And inflation is dropping. When you go to the market, prices of goods have come down, except those that are not really exposed to the exchange rate situation, and therefore it doesn't have much effect on their pricing, and they have probably maintained it. In the same way, if we see significant drop in lending rates, because it's a part of the cost structure of a business, when your cost is coming down, you must also enjoy and transfer part of the gain to your consumers in the form of lowering prices. Because if you don't do that, others will do it and compete you out of the market. It's not a question of, I don't want to do it because I need more time. It's a very competitive market. So if you were borrowing at 25, 30%, and today you get it down to say 20 or less, it means that your cost of production is going down. Your cost of doing business is going down. So if you want to be competitive and get your market share, you must reduce your prices. So it's going to happen. But bear in mind that I think we should also appreciate that it's not every business that is so much exposed to bank credit system. So if you are not exposed to bank credit system, it has no effect on you. There are people who are doing business, and the nature of their business, they are not borrowing so much from the banking system. And even if cost of credit comes down, it does not mean that access will be that easy, because the banks must have the liquidity to lend in the first place. And then you must have businesses that are also having the capacity to absorb whatever loan facility that is given to them. The two must work together before you get access to credit. So if you are not borrowing, the banks are also not lending, in spite of the price, the rates coming down, what will be the effect on your prices? It will have no effect. So different people will experience it differently, and let's appreciate that.
I'll come to you to get your thoughts about also what do you make of how the Bank of Ghana is managing the currency issue and even the supply. There's been argument that there isn't adequate supply on the market, and what do you want the Bank of Ghana to do for industries as well? Let me bring in Professor Charles. Prof, I mean, from the economic spectacle as well, I mean, what do you make of this cut? But there are some who are still worried that there are still uncertainties out there. There's exchange rate volatility. There's some levies and fees and charges that could take effect very soon. We've seen crude prices not being that stable. Petrol will go up marginally from tomorrow. Diesel and LPG will go down. If you look at all these indicators and you look at this 300 basis point reduction, what are your concerns from the perspective of an economist and looking at the economy and what the Bank of Ghana is doing to reduce the cost of credit?
Thank you very much. So first of all, the reduction is very welcome news. It has been long overdue. I've been calling for this reduction since 2023. Actually, I'm one of the few economists that don't seem to understand why we raised the policy rate so high to about 30%, and one of the highest in the world. I think it's a problem with our diagnosis of inflation in Ghana and in most of Africa. We seem to be thinking that, or even sometimes when we know that inflation in Ghana is driven not necessarily by money supply, and the World Bank report acknowledged that it's mainly supply side issue, and therefore using the policy rate to fight inflation is actually counterproductive. You could achieve to slow down inflation, but at a very high cost, sacrifice of growth and employment. And that's what we have managed to do over the last 2-3 years. We've raised the policy rate to about 30%, kept it at 30%, 28% for about 2 years. And the opportunity cost of that is that we've not been able to expand the economy as we should, and we've not been able to create jobs for the young people. And I think that's a shame. Now, it needs to come down. Everything points to the fact that it doesn't make sense anymore to keep it at that high rate. If inflation has dropped to about 13.7%, the exchange rate has pretty much stabilized. The government has had a lot of international reserves. One would expect that the policy rate should have come. I spoke to some of my friends on the Monetary Policy Committee that I expected nothing less than 1,000 basis point reduction. And at the moment, 300 basis point reduction is good. But if you look at the difference between the policy rate and the inflation rate now, it's about 11.3%. And that's one of the highest we've had historically for many years. So what is driving? I don't see the risk that they are seeing in keeping the policy rate still around that 25% when the inflation is at just about 13.7. I was expecting the policy rate to come down to about 18% thereabout. But maybe it's going to take time to do that. But I don't see any reason why we need to keep it above 20% if things remain the same. I don't see the risk that they are seeing that should justify that high rate. It's made cost of credit quite high. And if you look at the credit, domestic credit to the private sector, we are not performing well at all. If you compare us, even by sub-Saharan African standards, by lower middle income country standard, we are doing just about 17, 18% of GDP. That's low. Other countries are doing 120, 130% of GDP. So I don't see the reason why we think we have to mop up liquidity instead of using guidance and policy to help banks to lend to the private sector at a lower rate. The central bank still fears inflation. I think we are too obsessed with the inflation or inflation expectations that we feel that we need to, and maybe we need to look at our constitution again, because look at the central bank is to narrowly focus on inflation targeting. And price stability. But I think we need to give it a bigger mandate than that. Okay. The U.S. Federal Reserve and some other central banks focus on dual objective, inflation and employment. Full employment is what we need to target.
Prof, just sorry for that rude intervention because of time constraint. In about 30 seconds, I'll plead with you. What could be your final thought, please, on this issue, please?
Well, I think that we need liquidity and credit. The businesses need it. We need competitiveness. We are competing with the rest of the world. Businesses in China and Asia and elsewhere are borrowing at 3%, and some of them have even government almost free loans, and they are exporting their goods to Ghana. All the big push agenda will amount to nothing if we cannot solve the problem from the monetary policy side to make sure that the financial sector is sound and to be able to lend at a reasonable long term and low interest to make businesses to be able to expand and compete in the rest of the world.
Zakoba, I mean, quickly, before I even get your final thought, what is the situation when it comes to, for the dollar supply, so to speak, right now? For your members, how is the situation now? Has it improved or it's still a problem?
Well, I think there are complaints in the system that when you go to the banks, you don't get the dollar that you need. So people resort to the black market. And the rate between the black market and then the interbank rate is not the same. It's significantly higher at the black market level. But of course, we all know that it's dropped. Generally speaking, it's dropped. So we're still having about, a 2%, 2.5%, difference. So I'm sure, I don't know, but maybe with time we could see some improvement. But then on the issue of the Bank of Ghana and its management of the monetary system, I think that the mandate of Bank of Ghana is the monetary policy. But I think, and they are doing pretty well because we've seen the cedi gaining and all that, gaining, weight. So that is all good. But I think that the linkage between the monetary and the fiscal is very important. Whilst we've managed to stabilize the system, if you don't get the productive sector working, inflation will not be sustainable because the level of inflation we have today is dropped significantly. How can you sustain it? You can only sustain it when food prices continue to drop, and you can only drop food prices when we are doing volumes of production as a commercial, level, and other factors of production so that we can increase productivity. That's the fiscal side. So the linkage between the two is key. If you only focus on one area and you ignore the others, I know Minister of Finance is in charge of that, but I think the linkage is key.
Let's talk about in 30 seconds, your final thoughts.
Well, my final thought is that the macroeconomic stability we've gained is good. Consolidation is good, but let's move to the level where we see actual growth to bring up businesses and expand to create the jobs that we need for this country.
Indeed, create the jobs that we need for this country. I know the debate will still go on in your homes and your offices about how best can we stabilize the economy when it comes to the fiscal front and even the monetary front as well. How should Bank of Ghana go with this fiscal or more of monetary inflation targeting policy to ensure that businesses can get access to credit and the city is firmly stabilized? We've heard from the Associate Professor at the Institute of Statistical Social and Economic Research, Professor Charles Aka, who joined us via Zoom, and also Chief Executive Association of Ghana Industries, Sechu Makwabwa in studio here. Thank you so much. This has been PM Express. I'll say have a great day.